Evening, evening, evening. As we go, let's do this. Come on, right there, and right there, and right there, and right there, and live, 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 live. We are live. Uh-oh, not down here. Gotta get live down here. Chasing Jack over here. Cool beans. So we're gonna go live over there. Cancel that. Start streaming. Stop recording. And we're going to do this here. We're going to do that. Then we're going to do this. And then we're going to do that. And then we're going to do this and that. Nice. That and that. And we are good to go. Well, alrighty, alrighty. Spanky, what's going on? Frank, Anna, potatoes. Dylan, CR Trading. Alrighty. What else we got? Ab, Chasing Jack. State New York Critics. Good evening. Emmanuel, Andrew, Duff. Hey, Dividend Stock Talks asking me to be here again. Interesting. I love the way why he does this. Alrighty. All right, what else we got? Math, Galder, Poma, One Grumpy Old Bear, Duke, Kyle, Just Curious, Insight 101, Skydog, Chasing Jack, love the music, cool beans, thank you. They cloned Drew. All right. Steve, how's it going? Andrew, good evening, good evening. Well, let's get started. Mike Spencer, Easy Money. Art Haynes, what's going on? All that being said, good evening, everyone. My name is James. This is Dividend Stock Talk, brought to you by the 10-Minute Trader, where I invest in dividend stocks for weekly cash flow. Looking for a simple, safe, predictable, consistent 1% per week. I know it sounds kind of boring. For those people who want to get rich overnight, you're in the wrong place. This is slow. This is boring. Okay? This is monotonous. Does the same thing over and over and over again. Just curious. How you doing? El Pablo. All right. El Pablo. I'm going to remember that. Glad I didn't do a covered call yesterday with my Kohl's share. Way to go. Hey, you never know. You got an intuition inside telling you to do something. We'll do it. I'm glad it worked out for you. That being said, let's take a look at what you guys want to see. Now, I would prefer you only give me companies that you know have dividends and have weekly stock options. Because if I'm looking for weekly cash flow, I got to find something that trades on a weekly basis or sit in front of my computer staring at this all day. No, I'm not doing that. I'm not sitting in front of a computer watching the screen all day. So, simple strategy, safe, predictable. Simone, how's it going? Nice to see you here, Simone. Ready to go? So, that being said, let's take a look at some stuff. Let's take a look at what we have on the list. So, we looked at Kohl's today, this morning. So, let's take a look at it. The high, the low, where was it? Where is it? Where's the motion? Where is it? Where does it look like the stock's going next? Chasing Jack wants to take a look at Kohl's. How often do your covered calls end up in the money and you have to sell? Sometimes once a week, sometimes twice in a week. Tara Duckus, to the dumpster. All right, whatever. Are you interested in IPOs? Nope, I don't do IPOs either. I'm looking for companies that have been in business and have been profitable for a minimum of 2 decades. IPO does not fit. 2 decades of consistent profitability is what I'm looking for. So let's take a look at Merck. The high, the low, all that kind of nice, neat, fun stuff. Just drops. Now she's going sideways. We're at 180. We're at 81.61. All right, so if I'm going to buy it at 81.61, well, I want to sell a covered call and pick up whatever premium they're offering me on the 82, because the 82 is going to be the closest. Okay, score 81.61. So the closest strike price, let's move this over so you can see it better. The current price, 81.61. The closest strike price is going to be the 82. Well, for this week, it's only for 61 bucks per contract. Well, next week, it's going for 227. Well, that's a hell of a lot better of a deal. 227, because that's 2.5%. So if I did this week, well, I'm not going to make that much. I make less than 1%. But next week, I make more than 2%. Well, that makes much more sense. Simone, Kohl's got out of control. Do you know what happened? No, don't know. Vodka Cat, good evening. Interesting name, all right. Wow, a lot of you guys over there. Elegance Limo. Woolly Cat, Professor B, Booger. I remember Booger from Revenge of the Nerds. All right, so this week, it's not looking that great. Next week, it's looking much better. But here's another way of looking at it, all right? Tomorrow's Wednesday. So Monday and Tuesday are already gone. So out of 5 days, so if you imagine this, if each day represents 20%, 20, 40, 60, 80, 100, that's the maximum amount of time value you can get out of 1 week. Why did Caterpillar go up so much? They squeezed Kohl's this morning all the way to 19. Well, there's nothing wrong with that at all, Jack. Think about it. It kind of makes sense. If you have the money and the power to do something, well, you can do that if that's what you want. Okay, if you want to be in, how often do you get invited to that party? Think about it. They give you a call, say, hey, we're going to do a squeeze. You want to join in? See, some people get invited to that kind of a party, and then most of us don't. So I'm not going to pretend that I get invited to that kind of stuff. So I just go business as usual. If it ain't broke, don't fix it. If it's working fine, well, keep doing it. That's just my opinion. Alexa, off. It's just the way I think of it. If it works, leave it alone. If it continues to work, if it's not broken, why bother trying to fix it? Hi, what stocks did you buy this week? Oh, what did I buy this week? Hold on. This was what's on the list for this week. Kinder Morgan, Bristol Myers Squibb, American Eagle Outfitters, TSLL. Now, for some strange reason, TSL never makes my list because it's not something I normally do. But when you got someone leaning on you saying, hey, let's get some TSLL. AA. Alcoa, there you go. Alcoa, IBM, Dow. Now, we didn't look at Micron. Did we look at Micron? Well, let's look at Micron in a little bit. Devon Energy, got some of that. Intel, Siri, FCX, Dow, The Gap, and some Harley Davidson. Well, let's take a look at them. See what they look like. Uh-oh, wrong button. I hate when that happens. So let's take a look. Why did Caterpillar, so AB, I have no idea. I didn't even look at Caterpillar today. Or yesterday, for that matter. Pony AI, yeah, no. But I was able to make a 4K at least. Chasing Jack, way to go. That's my 8% for the week. Nice going, Jack. Hey, everyone, user 9618, blah, 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 blah. Okay, rest in peace, Aussie. I got to agree with you there. What's your overall profit from last quarter? Last quarter, let me think. Hold that thought for a second. Last quarter. I got to take my glasses off for this one. Glasses. All right. Okay, let's move it over. Right over there so you can see it. Right there, and let's go right there, and right there, and there we go. Just go to the website, see what it looks like. All right, we want to take a look at trades for 2025. Okay, so Let's think. Last quarter, that would be week 13, right? Week 13. All right, here we go. Week 13. Yay. Okay, so week 13. How the hell am I going to add this up? Ooh, I have an idea. Hold that thought. You know what? Why don't you DM me? We'll talk about that later. Because I average over 1% every week. Look, 3% here, 1.25 here, 1.3 here, 2.7, 2.4, 3.0, 1.8, 3.3, 2.7, 3.9, 1.7, 1.4, 0.65. Oh, I didn't hit it that time. 1.9, 2.7. 1.3, 1.1, 2.08, 1.4, 1.6, 3.6, 4.2, 3.6, 3.1, so on and so forth. I honestly don't know because I don't keep track of it that way. It's a running tally. The running tally so far, I stopped off at week 26. Yeah, I got some work to do, 26. Week 25, I could do that one too. In week 24. Okay, so week 24. So I got the last 4 weeks I got to finish doing. So I haven't figured them out for 24, 25, 26, 27, and 28. All right, so where we are now. But here's the running tally so far. Okay, account one was 57% at the half of the year. This one was 46 at the half. This one was 61 at the half. So we just started the fourth quarter. No, sorry, the third quarter. So those numbers right there represent the first and the second quarter. So if you divide it in half, we're at 63 now. So what was that? 31% per quarter. This one was 23. And this one was 25, 26, 27, 27, something like that. So I think that's pretty good so far. So let's keep on going. Let's get out of there. We don't need to see that. Oh, we pull it over this way. Just leave it there and go back to here. So it's always going to be about the numbers no matter how you do it. What are you buying? Why are you buying it? Now, you all know what my rules are. My rules are simple. I want a simple, safe, predictable, consistent 1% per week. Now, to do that, I need companies that are consistent, that are boring, that don't move a lot. Well, the only way you can get consistency and predictability is with something that is predictable and consistent. Well, those are the companies that we all know of. You know, IBM, AT&T, Visa, MasterCard, Home Depot, Lowe's, you know, the boring stocks, the blue chip stocks, the one that have a very low, what do they call that? Yield, low dividend yield, 1%, 2%, 3%, boo-hoo, boring. Yeah, but here's the thing. If you do weekly options against it, and I know some people don't agree with weekly options, but here's the thing. A covered call is one of the safest trading strategies there is. Now, just because I say call option or stock option, people want to panic because they think they're risky. Well, they're risky if you don't understand them. Now, I can say shoveling snow is risky if you don't know how to do it properly, or if you're too young, or if you're too old. Okay, there's a lot of different factors in no matter what you do. So if you like the idea of a consistent, predictable, and safe weekly cash flow, well, fine. Why not open up your eyes and open up to the possibility that there could be something out there that's simple, safe, and easy. Okay, Eagle, we got that. We answered that question for you. Uh-oh, what happened there? How many accounts in total? I get 7 at the moment. I'm supposed to be picking up account number 8. What stock to buy this week? Okay, got that one. Just a nobody, $3.95. How you doing? Did you see Kohl's today? No. Believe it or not, I didn't. I turned my computer on this morning. I did my trades, and then I walked away after about an hour. For the rest of the day, I really honestly don't care. It's weird for people to hear that because you think just because I trade stocks that I'm in front of my computer all day. No. 10 or 15 minutes. Well, the morning trading group usually takes about an hour. So I was on there for an hour this morning. Okay, fine. So after that, I don't really go and take a look at my computer because the way that I trade is supposed to be 10 minutes a day, not 2 or 3 hours a day. Jose, that's awesome. Thank you. Altria is the way to go for tomorrow. All right, Jojo, we'll take a look at that. Lisa B, how are you today? Good job. Thank you. That's pretty consistent. Thank you, Luis. Follow your channel. Thank you. Woes are great. W-O's. Woes are great. Oh, woe is me. No, wrong woe. Greetings from Portugal. Bruno, back again. How are you today? Bitcoins are king. Okay. Had written on the wall, thank you. I invest in EQIX and I am losing money. Well, you shouldn't be investing in stuff that doesn't make sense. I don't even know who EQIX is. Just doesn't make sense to me. No, one up. I'm not going to buy coins. I don't do cryptocurrency, which is kind of funny. Hold on a second. Thanks for your help. You're welcome, Lisa B. Mindy, could IBM just be traded weekly? Rinse and repeat. Yeah, it can be. Almost any stock that has weekly options can be traded weekly. And if the shoe fits, well, there you go. It's a good expression, if the shoe fits. Is Kohl's overbought? Do we wait for the pullback? Okay, so Orlando, I really can't tell you because I have no idea what it is you're looking for. Okay, a stock goes up 2 or 3%, I'm out. That's all I'm looking for. I'm only looking for a very small bite at a time. Like, how do you eat an elephant? Well, one bite at a time. The journey of 1,000 miles starts with a single footstep. However you want to look at it, whatever your destination is, well, mine's retirement. I'm already here. Yay for me. But we're all on our own journey. You have a beginning, a middle, and an end. How do you want it to look? Because we're the only species on this planet that's got to pay to be here. So what are you doing with your money? You got to do something with it. And when you get to my age, when you get to retirement, you got two choices and only two choices. Okay? And the two choices would be, number one, invest the money yourself, learn how to do it. Take your responsibility for your own money. That's just one. The second, and you only got two, flip a coin. Do it yourself or give it to someone else. Now, I'm pretty much sure, like a lot of people will agree with me, mostly, I don't think anybody has more interest in your money than you. So why would you give up accountability of your money to someone else that doesn't have your best interest in mind? That just boggles my mind. It appears the meme traders got their hands on it today. Yeah, they probably did. The 1450 strikes on Kohl's premium is up to close to 12%. Well, that's awesome. But is that a risk you want to take? And it is a risk because all right, well, I know what it does on a normal everyday basis. Okay, I bought it at 22, slowly worked down to about $6 or $8, somewhere in that area. And I make a nice premium on my Kohls every single week. But if I cannot roll it forward and pick up a profit that's worth me keeping it, it's just going to go bye-bye. And I'm okay with that because bears make money, bulls make money. So bears and bulls make money. But pigs and hogs get slaughtered. Share the wealth. Don't be so greedy. Take your profit. Say thank you. Move on to the next one. If you find a goal, if you find a strategy that works for you consistently, perfect it. Stick with it. Don't be looking at everything else. There's a lot of stuff out there to look at. If it doesn't fit, whatever it is you're trying to do, whatever goal you're trying to get, if it doesn't fit, don't buy it. I can't express that I can't express it enough. Okay? Before you buy anything, you should have a good idea what your goal is. How long do you plan on holding it? When are you going to sell it? Because I'll tell you what, if you buy something and never sell it, well, it's not a profit. It's not a profit until you take it. Okay, just because Kohl's went up today, yay, it doesn't mean anything until you take that profit and you say, thank you very much. I'll see you the next time you feel like taking a ride, you know? But it's a double-edged sword. Because, yeah, it jumped up nicely today. So you're going to have those people tomorrow morning bailing, jumping ship, okay, running for safety, taking the profits and running. And then you're going to have a bunch of people that says, no, I'm going to hold on to this. I want to take it right all the way to the top. Well, where's the top? Nobody knows. So some people are going to hold on to it and take it to as high as it goes, wherever that is. And then as she falls back down the other side, they'll probably just take it for the ride down the other side too. So it's not a profit till you take it, find a good strategy, stick with it, perfect whatever it is you want to do. All right, where are we next? Looks like you are retired from a 9 to 5, but still work on your business. Well, actually, it's not a business. It's just a hobby. But it's getting to a point where the hobby is so congested, okay, that I might have to turn it into a business. If it doesn't fit, you must have quit. Oh my God, Jojo, I can't believe somebody actually said that. If it doesn't fit, you have to quit. That's terrible. Terrible. I know what you're talking about. I do. Hey, everyone from Alexis, Memphis, Tennessee. Cool beans. What, where we got? I got a question there. Okay. 10 or more years for retirement. All right, Lisa, way to go. 10 years? Wow. All right. Nettie, can you buy and sell stocks same day and still receive dividends? No. Because a dividend, you have to buy it before the EX date. Now, there's 4 dates. Hold on. If we're gonna do that, we might as well jump in with both feet and do the whole thing. Here we go. So dividends and the EX date. So if, Nettie, if you're wanting to collect a dividend, there's 4 dates you need to keep in mind. Date number 1 is the announcement date. That's when the company says, hey, this is James from Dividend Stock Talk. We had a great year. We made so much money. This is how you're going to get yours on this day. That's the announcement date. We made so much money. This is how you're going to get it. It's just announcing what they're doing. Okay? After that, the second date. What am I doing? No, I'm going the wrong way. What's going on? What's going on? Technically challenged here. Technically challenged, I tell ya. Okay. Date number 2 is the EX dividend date. Date number 2. That's the last day the stock trades before the dividend is paid out. Behind me, you see just a regular calendar with these little green dots. Okay, those little green dots represents companies that have consistently increased their dividends. 25 years. This is the name of the list. 25 years old plus dividends. All these companies, green dots. Now, if I want to get the dividend on any one of those, I got to buy it before the little green dot, because that's when the company pays their dividend. So date 1, announcement date. Date 2, the EX dividend date, little green dots. Okay. Date number 3 is the date of record. You have to own the stock, be the registered owner of the stock on the date of record in order to receive a dividend. So you have to buy it before the AX date, and you have to own it on the date of record. Now, date number 4 is going to be the payment date. Payment date, EX dividend date, date of record, and payment date. 4 dates. Okay, so if you want to collect the dividend, you have to buy it before the EX date, sell it after the date of record. Make sense? All righty. CNC. Ron, what is CNC? Now, I know a CNC machine is one of those machines that cuts with a jet of water through steel and aluminum and whatnot. They use those in machine shops. But here in stock market, what are we talking about CNC? So let's go back to here. Let's go back to here, and let's put CNC here. Is it actually something? Is it? Centene Corp. Centene Corp. What the heck did they do? Centene? Is that right? What is that? What did they do? Centene. Okay, well, it doesn't look very promising. Here's the high, here's the low, here's where it was, here's where it is. Look at this. Up, down, sideways, huge drop, and down. Okay, So what are we looking at? Wait, I gotta do this. This is bothering me. Hold on. Let's try it one more time. One more time. There we go. All right, so what are we looking at? There we go. Now we can see the whole thing. So look at the big drop here. What is so appealing about that? I've never heard of the company, but let's zoom in a little bit closer. There we go. 30 days ago would be right here. Now, it looks, well, there's your 30-day high. We can tell that one. Big drop. Now, I like big drops for one reason and one reason only. Big drops like this have a tendency to fill, which means it will go up eventually as soon as it's finished finding the bottom, which it looks like it did yesterday. So zoom in a little bit closer. It did. Yesterday is the bottom. Now, this could be the bottom of the year, the bottom of the century. I really don't know because I really don't know who the company is. But it is the bottom yesterday. But we only have one day to the upside. I like 2 days to the upside for confirmation, and then the third day to take action. Okay, so I want to see what happens tomorrow, and then Thursday would be the earliest I would get into this thing. So let's write C and C down for a bit, but at this moment it's just going to be a no. That's a no for today. A no, no, no. Okay, AB, why did Caterpillar jump up? CAT. It didn't jump up. Okay, here's Caterpillar right here. Okay, here's yesterday and here's Friday. Okay, so Thursday was the high, Friday was lower, Monday was lower, and today it's not jump up, it's catch up. Okay, it's basically the same thing it did yesterday except for the opposite direction. Who did that? Drizzle. Yeah, hey, Drizzle. Thank you for that, brother. All right, so that being said, it is what it is. They squeezed Kohl's. All right, I suppose I'm not going to get away from this Kohl's thing until people actually take a look at it. Yeah, that is freaking crazy if you think about it. Okay, but if you take a look, a year ago, the high was a little over 22. She drops all the way down to 6, and then shoots up to 10 before this craziness today. Well, that craziness, you get enough people behind you, you can do almost anything. See, look at that. See, the only thing that means to me is look at the volume. The volume like 10 times. See, the volume's like the blue line's way down here at the bottom. Well, look at the volume for today. That's just freaking nuts. Who made most money that day? The market maker did. Well, let me show you. You're going to love this. You are going to love this. Okay, now, we know that the market maker gets paid by how many shares are traded on a daily basis. The market maker makes his money the same way the grocery store, the corner store, 7-Eleven, Quick Stop, Quickie Mart, Circle K, whatever store you have right around the corner. You walk right out the house and there's a store right there. They call it the corner store. We all know what a corner store is. Knock it off. The corner store, the guy who owns it, let's call him the market maker. He will buy a gallon of milk from the farmer for $3. And he'll sell it to you for $3.50. So he makes 50 cents. The difference between the bid and the ask is the same equation. The market maker, the store owner, he buys something, he sells something. He gets what's in the middle. It's called the spread. So usually when you look at a stock, you get two prices, the bid and the ask. Now usually there's a 1, 2, or 3 penny difference between the bid and the ask. So let's just go in the middle. Let's take 2 cents. All right. So for this example, for this equation, take a look at what we're looking. Okay. Month of May 4th, all the way there, all the way to today. Look at the little tiny blue on the bottom. Very tiny. You can barely see it. Okay. Those little blue lines represent volume. How many shares are traded on an average basis? Well, let's find out. Well, On an average basis, 7 million shares a day. See, that's what it is on average. About 7 million shares on average. Okay, so let's get out our calculator. You're going to like this. You ready? Calculator. Okay, now let's make this bigger. At 2 cents a share, 0 to, that's too bright. Let's not do that. At 2 cents a share, 7 million shares on average every day, on average, multiplied by 7 million. Okay, so, no, that's 20 cents. Wait a minute. That's 20 cents. No. 0.02. All right, see, I hit the wrong button. 0.02 multiplied by 7 million. Okay, so on average, the market maker makes about $140,000 a day. That's the market maker. What does he do? Well, he's the guy behind the cash register. Okay, so he's got the milkman in the back say, hey, buddy, I got a case of milk for you. Great, put it in the fridge. And you got 4 customers saying, hey, I want to buy a gallon of milk. He makes the spread, the difference between the two. So on an average day, the market maker makes $140,000 a day. Now, you may think that's wonderful, but it's not that easy to be a market maker, and it costs an awful lot for that privilege. Okay, you gotta be certified, I believe, and you have to put in a certain amount of years. It's not that easy. Last time I checked, it was $350,000 for the application fee just to become a market maker. That's what 10, 15 years ago, so it's probably different now. But on average, 140 million. So, sorry, 140,000. So how many shares traded today? Think about it. How many shares traded today? So let's get rid of that. So right there, 200, right there. See, look at it. 212 million. So let's do that math again. All right, let's do that math again. Okay, 2 cents, 0, 2, multiplied by, what number did I say it was? 102 million? Oh, 200 and something. Yeah, 209 million. Okay, multiplied by 209 million. Okay, so the market maker today made 4.18 million. So normally he makes 140,000 a day. 140,000 a day. Today he made 4.1 million just by buying and selling. Buying and selling, buying and selling. So where did it come from? Why did it happen? Okay, what caused it to do that? Well, number one, okay, no, it wasn't a push. It wasn't any of that. You got to remember, one person controls the opening price of the day. One person. Okay, so what was the opening price today? Okay, look at these little tiny numbers right here. Okay, D is the date, O is the opening price, H is the high, L is the low, C is the close, R is the range, and Y, I have no idea what the hell that is. It says 16.15. What the hell does that mean? I have no idea. So anyway, this is the day right here. It opened up today at 1975. The market maker did that. Was that from, what is it called, overnight buying and selling? I don't know. I have no idea what the overnight market did. But I do know one thing. There's only one person in charge of the opening price of the day. And that's the market maker. So no, investors didn't push that number up there. The market maker put it up there. He put it up there, and the market said, oh, hell no. We're going to take these profits and just suck them out. And we ended up at 14.30. Okay? The market maker pushed it up to 1975. But the market, us, we said, oh, hell no. And we brought it back down to 14.30. Still kind of high. But still, the market maker made the money today. Anyway, let's keep on going. My hair looks terrible today. Bad hair day. Trade. Let's go back to there. Let's go back to here. All right, so are we done with the Kohl's thingy? Yeah, the market maker pushed it up for some reason. Maybe he got some news that there was a buyout coming out. Maybe it was some news that that some strange earnings report. I don't know. What about good Good work. Okay, open source, agriculture, good beans, urban, all over the screen. Okay, thank you. Could IBM be traded on weekly? Let's take a look. IBM. Interesting. Now, I did buy some IBM this week because the numbers looked really good. Now, normally I don't buy at the high, but guess what? The high was a couple of months ago. She pulled back and then she was going back up again. So it's a new trading range right here. So let's zoom into it. But before we do, remember 3 to 4 seconds should be all it takes to look at a stock. Okay, what 5 things? You ready? High, low, where was it? Where is it? What's the direction? Up, down. Now that is overly simplified, but for the time for what do you call it? To get things moving, let's just go simple right to it and just, avoid some of the fluff. Okay, let's avoid some fluff. So the current price is 281.96. 281.96. So the closest strike price is going to be the 282.50. Well, it's going for $8 and $8.85. Now, you do understand how percentages work, right? So if $1 is 1% of 100, $1, 1% of 100, okay? So 1% of 281.96 is going to be $2.82. That's 1%. 1% of 282 is 282. You're just moving the decimal point over. So if 282 is 1%, what's $8.80? If $2.80 is 1%, what's $8? That's got to be at least 3.5%. That's for 3 days. See? 3 days, 25th July, 3 days. But if we go to next week, then we have 10 days. Well, the 282.50 is going for $9.50. That's an extra $1.50. That's only 0.5%. So I do this week. This week is a better shot this week. Anyway, it's always a numbers game. See, the chart looks good. The numbers look good. So let's dive a little deeper into the chart to see how good is it. Well, it doesn't look good at the moment, but it did on Monday. This is what happens. Now, I did buy some IBM on Monday. Let me show you. All right, so we have a bottom of the year at 181.81. We got a top of the year at 296.46, and that was just a couple of weeks ago. Look at your last 30 days right here. Okay, here's your last 30 days. Okay, your 30-day bottom at 280. She jumps up to 296. That's a $16 increase. Well, that's a nice increase. Then she drops down to 280. Okay, and then Wednesday. Okay, last Wednesday was the bottom. Thursday, 1 day to the upside. Friday, another day to the upside. Monday, it's a down day, but it opened higher. Now, that's my rule for me. Okay, you got to figure out your own rules. I'm just showing you what my rules are. 30-day top comes down to a 30-day bottom. I like 2 days to the upside. On the third day, I want to jump in if she opens up higher. Well, on Friday, okay, she closed at 285. Well, look at Monday, the very next day. Monday, it opened up at 286. So the previous day closed 285. Monday, it opened up at 286. That's my cue to jump in. 2 days the upside, the third day being higher. So yeah, I jumped in at 285. So I own it at 285. Well, now it's down to 281. So you guys have been asking over and over and over again, well, what happens when the stock goes down? Yeah, what? The stock goes down. That's what happens. Stocks go up, stocks go down. What did you think was going to happen? It got 2 ways to go. That's it. Well, let's call it 3 ways. Okay. Well, actually, it's only 2 ways because going nowhere means it didn't really go anywhere. It means just stayed where it was, so there was no action. So it goes 2 ways. It goes up or it goes down. All right. So I bought it at 285. Now it's at that 281. So what? I still own, I don't even know how many shares I own. Let's just say I own 500 shares. I still own the 500 shares. So if the stock goes down, well, I make that premium that I sold on Monday. And it was a nice premium. So if on Friday it's below 285, well, I will still collect that 1 or 2% that it gave me on Monday. And next Monday, I'll be looking at what next strike price to sell. Because next week, I don't have to buy the stock again. I already own it. So if it's below what I paid for it Friday, I'll just bring it into next week and find another covered call. Because look at it. Okay, the 282's 880. That's over 3%. The 285's 760. That's over 2.5%. The 287, 665. That's over 2%. And you can go out further and further and further, and it's still giving me a nice premium, no matter how far distant I get away from where the action is. Now, the action is at the money. So you have in the money, which is good. Then you have at the money, which is all the action is. And then you have out of the money, which is hopeful. Hopeful. Because you're hoping it goes up when you're selling out of it. All right, so anyway, what happens when the stock goes down? It goes down until it's done. And then it turns around and then goes back up again. So let's pull it back a little bit. Pull this back. All right, so what do you think? Look, up, down, 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 up, down. I can do this all day long. That's all they do. It goes up, it goes down, up, down, up, down, up, down. That's all it does. So yeah, I bought it a couple of days ago, 285. Now it's at 281. Big deal. Eventually, if she does go down, okay, up, down, up, down. So if she does come down, she's going to stop somewhere, turn around, go back up again. I honestly don't care because IBM pays a dividend and IBM increases their dividend every year. Works for me. And I get to do a covered call every single week. Every single position in my trading account. Now I got 7 trading accounts. No, 7. I got 7 accounts. So each and every single one has stocks in it. Every single stock in every single account has a weekly option against it. Because that's what I'm looking for. Weekly cash flow. Safely, predictably, consistently. All right. Next, enough of the soapbox. Okay, we just did IBM. Are there any stocks where you can get in it, get on it twice? Okay, Chad, you're gonna have to explain that one to me. That makes no sense. Are there any stocks where you can get on it twice with your money? Depends on how you look at it and how you're categorizing it. Because here's the thing: a covered call, if I buy it at 281.96 and I sell a covered call at 282.50, well, I'm getting 54 cents difference between the purchase price and that. So I'm gaining on the purchase price. Then I'm also gaining on the premium, which is getting paid twice on the same stock, if that makes sense. Doesn't the stock go down after the dividend? Most of the time it does. That's why I don't want to collect the dividend. I want to get in, get my premium, and then jump on out. Drizzle wants to take a look at Rigetti Spaghetti, RGTI. I don't know why you want to look at that, dude. RGTI, Rigetti Spaghetti. Okay, I'm not quite sure what it is you want to look at, but take a look at this. The thing was less than $1 a year ago. Shoots up to 22, pulls back up to 18. Now it's coming back down again. So I'm not quite sure what you want me to say about this other than, yeah, it's time to sell it, in my humble opinion. Now, I'm not telling you what to do. I'm just saying the bottom is here. The top is here. This is not the time to be looking at buying it. And if I was going to buy it, well, I'd wait at least 2 weeks for it to come back down to a normal territory. But RGTI, I'm going to say no for me. Okay, Netty, the owner of the stock at EX date gets the dividend. Okay. if you sell before the EX date, if you sell it before the EX date, Nettie, whoever owns the stock on the date of record is the one who's getting the dividend. Just anybody. Yeah, you can sell after the EX date. So you buy it before the EX date, capture the dividend, hold it past the date of record, and then sell it the next day. And then move on to the next stock. That's called dividend capturing. That was the original trading strategy I had for my daughter, dividend capturing. And then we threw in dividend capturing 2.0 with the weekly options because it was more profitable. Now, she was doing great with the dividend capturing. That's a lovely accent you have, New Jersey. Boston. We park our car in Harvard Yard. Look at the spread on BKRA. Kohl's made me $12 million today. Steve Tucker, way to go. Andrew Brindle. Yay. All righty. In a word, recession, how would you invest? Energy companies, banks, can you give your opinion? Now, in a recession, I look for the staple companies, the stable ones. You know, the ones that people use. Procter & Gamble. They make consumable products. Okay? Wells Fargo, they're banking. They're over 100 years old. Pepsi, Coke, people are addicted to their caffeine. Starbucks. Take a look at what consistently buys and what consistently sells, even during those times. Wow. It's only Tuesday night and my throat's getting sore already. My goodness. All right, Andrew, can you collect the dividend without selling, as sometimes the stock goes down, not up, and you don't never sell in the red? Well, I'm going to agree with you, never sell in the red, but can you collect the dividend without selling? Well, not quite sure what you mean by can you collect the dividend without selling, as sometimes the stock goes down. Well, why would you sell it if you want to collect the dividend and hold on to it? I'm not quite sure if I understand that one. Here we go. You will not get the dividend and need to own through the EX date. Yep, CNC. We already looked at CNC. You can sell the day after the EX date. You have to sell it after the date of record, which they do change. Help us in Illinois. Joe, how are you doing in Illinois? You actually have to ask a question, Joe. CNC, can you look at this for me? Okay, Ron, we already looked at CNC. Already looked at it. Yeah, I know what it is. Centini, whatever. Yes, Medicare. Ron Stuffer. Yeah, we already looked at it. Chandler Firewood, PK. What the heck is PK? Never a good sign. Okay, so Chandler Firewood, PK, no. Here's my reasoning. 15 August, 19 September, 17 October, 16 January. Those are all months of the year. I don't do months of the year. I only do weekly. Because there's only 12 months in a year, it means I'm only getting 12 checks. Think about it. Why would I want to get 12 if I can get 52? I didn't go to college, but I do know 52 is better than 12. Well, that's in context also. It depends what you're looking at. Big Bill got him looking for it to go back up. I have no idea who Big Bill is. What's going on with LMT? Lockheed Martin. I don't know. LMT, Lockheed Martin. It dropped. Stocks do that. Okay? Take a look. Big gap down. Why? Now, not just the market maker pushed it down, okay? The market maker dropped it almost 40 bucks. All right? Which is about 10%. But then the market, you, okay, we dropped it another 25 bucks. So the market maker drops it about 30 bucks, and then the market drops it another 25 bucks. Well, this is a good time to be looking at Lockheed Martin. Well, because number one, look at the volume. So something was up with the volume. That's probably an earnings thing. So if you like Lockheed Martin and you know who the big man is in the big chair, yeah, you know that Lockheed Martin's going to bounce eventually. So keep your eye on it. I'm going to put Lockheed Martin down for next week because absolute worst case scenario, if tomorrow's an update, Thursday's another update, I usually don't buy stuff on a Friday. Okay, but Monday, yeah, I'm going to put Lockheed Martin down for Monday. And we'll take a gander at it next week. All right, we already looked at Rigetti Spaghetti. It was a no. Okay, Drizzle, already looked at Rigetti Spaghetti. Okay, TikTok Tommy, Monday, I bought 3 contacts of Dow. Why? Okay, Tommy, I don't buy contracts. I sell them. So maybe you bought some from me. If you're younger than 30, invest in the S&P or a growth stock, and then later put that money into a dividend. Legoat. Okay, I want to ask you a question, if you don't mind. Okay, in your humble opinion, I missed the Legoat. Thing disappeared. Oh no. Okay, right there. Legoat. Explain to me. Now, the S&P has only averaged 10% over the last, 15, 20 years. And I don't know of any other growth stock that actually pays a 50% dividend or can allow you to double your money every 14 to 16 months. Well, hey, to each his own. If you think that's going to work, ain't going to work for me, I tell you that much. Andrea, I think little Kohl's was, Drizzle, Kohl beans. I missed something. Okay, Andrea, I think little Kohl's was part of this ha. I have no idea what ha means, Andrea. I think little Kohl's was part of this ha. I don't know. You have to fill me in on that one. Randall Ray, thank you. Drizzle, thank you. Sergio, Jojo, Altria for August 1st. Strike 60 premium 89 1.4%. Okay, Jojo, Altria, MO. Let's take a gander at this. Shall we take a gander at this, Jojo? Here we go. The high, the low, where was it? Where is it? Look at the motion. Up, down, up, down, up, down, up. Okay, so it is going to the upside. It is an upward trend. Okay, we're at 59.44. The closest strike price would be the 60. The 59 or the 60, one or the other. The 59 is going for 47. No. The 60 is going for 19. No. How about next week? 59, 141. Yeah. The 60, 89. Yeah, so either one. Now, the 59 is going to be safer, and the 60 might be a little bit more profitable. So which one do you like? Interesting question. So let's take a look at the 59. All righty. Oh, no, he's saying 60. He's saying 1.4%. All right, well, look at the last 30 days. What do you think? Last 30 days. 30-day high, she drops. Here's your new bottom. Shoots up. Pulls back, new bottom. Now she's going up this way. Up, back down. Now she's going back up again. Okay, fine. 59.44. What does the 60 look like? All right, we're going to change this to covered stock right there. And then we're going to go to the 60 for this week. No, for next week. 60 for August 1st. Yep, for next week. There we go. One contract. See what it looks like. See if he's right. Market order, there it is, and here's what it looks like. Buy one covered call, Altria, MO, 100, that's the weekly options, 1 August 25. That's not this Friday. That expires next Friday. So there's about 10 days left before this option expires. So this option, the $60 call strike against the stock, MO, at the market to open, 2 orders, stock option, 148 is the profit, 5,800 is the investment. Let's take a look. Calculator, come out wherever you are. There we go. Now, to find out our rate of return, we take the profit right here, 148, into the calculator, and then we divide it by the cost of the trade, including commissions and fees, 58.52. So look at it this way. Divide 58.52. It's 2.5%. Okay? So Jojo, your math is a little incorrect. I'm coming up with 2.5%. Drizzle, woohoo! Thank you. All right, so anyway, now you have a couple of questions you need to ask yourself. And number one is, does it make sense? If I'm buying it at the current price, what is it? Get out of there. Okay? If I'm buying it at the current price, $59.50, and I'm selling it at $60, I'm collecting an additional 50 cents between the purchase price, $59.50, the strike price, $60, and then I'm also collecting the premium. And the premium, let's get rid of this. The premium is right there, 89 cents. But what you're missing is you're missing that other 50 cents also from when you do get called out if it goes above 60, sorry, above 60. So yeah, not bad, 2.5% if you like Altria. That's always the big question. Do I like this company? Well, Altria has been in business for over 5 decades, and they've increased their profits for over 5 decades. So why not? Okay, W. Woodhouse. Just today, my Kohl's 1050 strike for the weekly got blown through up to 21 at one point. This is happening to all my picks since following you. I'm having to roll way out to capture gains. I'm not quite sure why you'd have to roll out to capture gains. Because if you bought the stock at, let's go back to Kohl's for a second. All right, now I've had this issue with other people, okay? So if Monday, 18th. Okay, so Monday's the 18th, right? So if you bought Kohl's on Monday, the opening price is $9.77. The closest strike price is 10. So if you bought it at $9.77, which is the opening price on Monday, wait a minute, 18, no, sorry, back up one. Yesterday was Monday, $9.68. So if I bought it $9.68 yesterday, the closest strike price is going to be 10. So if I sell somebody the rights to buy it from me at 10, I get the difference between the $9.68 and the 10, which is another 32 cents. Now, I know 32 cents is not a lot of money, but it's a $10 stock. Okay, that's over 30%. No, it's over 3%. Sorry, 3%. But if I sell somebody the rights to buy it from me and I collect more than 1%, what am I looking to gain? Am I looking to gain the appreciation of the stock? Or am I looking to gain the 1 or 2% from the option? You can't have them both. Now, I feel sorry that I'm sorry that you feel cheated out of that. That only happens once, maybe once a year. If you're lucky, once a year, maybe once every 2 years. But you got 3%, but lost out of 1,000. Yeah, but see, I can look at that all day long because stocks jump up and you miss out on that. You're making a trade. Am I going for my 3% safety, or do I want that chance? Because I'm willing to bet that Kohl's is not your only position. Okay, so you're making 1 or 2 or 3% on all your other positions, but this is the one that goes through the roof, and this is one you're unhappy about. Well, I understand you're unhappy. I do, seriously, because I'm in the same boat. Okay, I'm in it, down here at the $8 area, and it jumps up. But I know what the game is. Simple, safe, predictable, consistent 1% every single week trumps this every single day. Because you don't get this every single week. I do get 1 or 2% every single week. So you can't have them both. And I'm sorry you feel cheated. It's just the way it is. If you're looking for capital appreciation, that means buying a stock and it goes up, you're in the wrong place. This is not what this trading strategy is. It's got nothing to do with capital appreciation. You need to understand the difference between capital appreciation and cash flow. There is a huge difference, because this here is capital appreciation, where the stock was at 9, now it went all the way up to 21. Well, it's at 14 now, but still, it was at 9, now it's at 14. Well, that's over a 50% increase in one day. I understand we might be upset about that, but how many times did Kohl's do that over the last 2 years? I've had Kohl's for the last year and a half. It never did this before. This is the first time it's done it. So you mean to say, bitch, moan, complain about 1% every single week for the last year and a half, and the one time she jumps up, well, now I'm pissed off that I missed the capital appreciation. You can't have it both. You cannot have it when you're investing in the stock market. It has rules, okay? If you sell somebody the rights to buy it from you at a certain price, you have to agree to that. You got your 3%. Be happy with that. Take the money, say, all right, you know what? Let me do it again with another company. And when Kohl's comes back down again, jump back in and take it for another ride. You can't get stock appreciation and cash flow at the same time. It's one or the other. Not all my picks for the last month have done that. I am picking stocks better now because of you. Well, I don't know if you're complaining or being happy, because it looks like your what do you call it? Your method for picking is good before I was buying and selling. Well, all right. But all my picks not last month have done that. I'm picking them. Oh, I'm not complaining. Well, I'm glad you're not complaining, but some people do. Okay, even some people in the market in the trading group. Okay, they want to do the same thing. Stock jumps up. Ooh, can't I sell it and take that appreciation? No, you can't. Because as the stock price goes up, so does the option price. So once you sell an option, if the stock jumps like this, well, you have to buy that option back and then try to sell the stock. By the time you do all that, it's not really worth it. Okay? Yeah, don't you think the people in the stock market have already thought about that? Well, if the option shoots up, the stock shoots up, people can sell that, buy that option back and sell the stock and make a lot of money. No, it doesn't work that way. It sounds good in theory, but it doesn't work that way. How many stocks in total? This year, I think there's this week, like 10,236, I think it was. All right, Mindy, IBM's earnings tomorrow. Okay, your method of buying low, then waiting 3 days to the upside is working out great for me. All righty then. I'm glad that part's working out for you. All right, what else do we have over here? Can you collect the dividend without selling? Yes, you can. Hello? All righty. Look at the spread of BCAR. Okay, it's not on my list. Lovely accent, New Jersey. No. What do you think about tech stocks? I don't see FFO3 gaming. Okay, I don't isolate my stocks by industry. Techs, consumer goods, oil, energy. I don't do that. Okay, I do it strictly by the calendar. Okay, let me briefly explain. Okay, the calendar. We have ESS, which is Exxon, Esson, I don't know, so it's a oil and gas company. Illinois Works and Kohl in Nucor. Then we have O Realty, APD, Cardinal Health, and Fortis. And then we have General Dynamics, all in the same week. Okay, defense stock, health insurance or insurance. Fortis, I don't know what they do, real estate, I have no idea. Nucor's energy, ESS is a oil stock. ITW is machinery. All totally different industries. So I go by the calendar. Is the company profitable? Well, yeah, I'll put it on my list. Well, when are they paying the dividend? And there's a reason why I'm looking for the dividend. Because just before the dividend, okay, these little green dots, the stocks have a tendency to increase in value. So by knowing when the stock increases in value based on a known event, okay, stocks move for two reasons, a known event or an unknown event. Unknown events like a hurricane, a lawsuit coming out of nowhere, some kind of natural disaster, something you can't plan for, it just pops up, okay? But a known event, dividends, earnings, seasonality, winter, spring, summer, fall, Christmas, summer vacation, Thanksgiving, okay? Certain days of the week, certain days of the year, certain seasons, certain times of the year affect stocks differently. And stocks move differently based on times of the year, earnings dates, dividend dates. Those are called known events. You can set your calendar for them. Set your calendar by what stocks have their dividend coming up, because when the dividend's coming up, the stock has a tendency to go up in value. By knowing that, you have a little bit of an edge, right? You have a good idea where it's going to go. Alrighty, all right, where are we now? IBM's earnings tomorrow, got that. Do you open the same positions on all 7 accounts? Most of the time, yeah. George Davila. Davila? XRP is not a dividend stock. Okay, One Love. We did Procter & Gamble earlier today. It was a no because the numbers just didn't look right. Toyota, hell no. TikTok Tommy. I sold the contracts. Well, see, now, Tommy, most people just getting started will lose money the quickest, the fastest, the easiest by saying the wrong words to your broker. Okay, because if you say, I want to buy some stocks, or I want to buy some options, I don't buy them, I sell them. There's a big difference between buying and selling. J-Man, Amazon, AMZN. Yeah, they don't have dividends at all, brother. Okay, why would I, a dividend investor, look at a stock that has no dividends? If I invest in $1,000, how much will I make? Hold that thought. Is the reason for 7 accounts is protect from the government or broker going out of business? Both. Did you like that? Both. I don't trust the government as far as I can throw them. Did your calls get called away with the spike, or were you able to plan on rolling? Okay, so holy bad guys, I already rolled my Kohls last week into next week. So I got a nice fat premium on them. If somebody wants to buy me out, well, they can if they want, but they didn't. So my assumption is they're not stock buyers. Okay, now stock buyers, they'll run up the price, but they don't want to exercise options. Okay, so however they did it, they weren't interested in my stocks. How's that? $4G for low. Okay. Another crazy meme stock I bought just for the fun of it. Okay. Holy bad guys. Did my Kohls get called away? No. Let's keep on looking. Keep on going. Yeah, no. Chuck Jensen, how's it going? Drizzle, hat and mustache. Thank you. Amazon stock. J-Man, Amazon stock doesn't have dividends. Okay. AMZN. Oops, we're on the wrong screen. AMZN. Okay, it's going to be a no anyway. Here's your high, here's your low, here's where it was, here's where it is. Look at this. Down, up, down, up. Okay, it's going on an upward trend. Why would I want to buy it if it's at a high? Okay, 30-day bottom, 30-day top. I don't buy anything at the top of anything. Okay, so no. Jose, all right. Tell Team Vicky don't follow my page. Are you earning per week? Okay. Tell Team Vicky not to follow my page. I have no idea what that means. Alrighty, alrighty, alrighty. Okay, MB Bubra. Mbubra? HM. Oh, how much are you earning per week? Over 1%. So whatever number you can imagine, and imagine 1% of that on a weekly basis. Gallant, holy cow, I haven't seen you in a while, brother. How's it going? You want to take a look at Baxter. Why? Look at this. Drop, 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 drop. So today, it looks like it's the same bottom as yesterday. So could this be the bottom for Baxter? It could be right there. If it is, maybe by the end of the week or by the beginning of next week, this might be a good opportunity. Well, because it's at the bottom. Well, stocks go down until they're done. Once they are done, they turn around and go back up again. So if she's going to turn around and go back up, well, that's where I want to be. I want to buy low, sell high. You cannot get any lower than the low of the year. It just can't be done. You cannot buy any lower than the low of the year. Well, here it is. Now, I want 2 days the upside before I jump in. So I never get the bottom. I get close to the bottom. So 2 days the upside might be tomorrow, might be the next day. I don't know. Okay. 27.51. The 27.50s are going for 35 for this week. Next week, they're going for 10. That can't be right. It should be a lot higher than that. How is Kohl's go up with your dividend stock? It does not pay a dividend. Okay, thank you, Larry. Every once in a while, we do something. We bend the rules. So, James, what other strategies might you have that humble Jojo might profit from? Jojo, you're here. I'm giving you this information for free. Just be thankful and say, thank you kindly. There are literally dozens upon dozens of other trading strategies. Okay, this is the only one I give away for free. Sorry. Alrighty. Jose wants to take a look at Cardinal Health. Oh, D-Man, Amazon, AMZN. Oh, we just did this one. Yeah, no, I don't buy anything at the high. So where were we? CAH. Well, that ought to be interesting. Okay, so here's CAH. Look at the last couple of weeks. Here's your bottom, shoots up, now it's pulling back. So Cardinal Health is on my list. However, I want to wait for a bottom to show up before I jump in, because any one of these could have been a bottom, but they weren't. So it's still going down. Well, how far down is it going to go? Well, we'll soon find out, won't we? So I'm going to put Cardinal Health for next week. There we go. What you doing in middle management session? Oh, what am I doing in the morning session? Oh, it depends on what's coming up. But usually we just take a look at the positions that we have and anything interesting coming up this week. All right, what else do we got? AVGO. CZ Parkland. Kohl's not a meme stock, profitable and has massive value in real estate. Go ahead, dismiss it. Okay. Me made no money on Kohl's. I was attempting to say that the market maker made 12 million, 6 cents per share. So much for my shorthand. Huh? Alrighty then. Are you trading stocks? Yes, David, I am. Hello, ULCVXLMT is possible. All right, so I'm going to share something with you guys you weren't quite ready for. I had something to eat today, and it's not agreeing with me, and I'm going to go yak, which means I'm going to throw up, and I'm going to not be able to finish tonight, and I feel sick. It is terrible. So that being said, I'm cutting out early. Catch you guys tomorrow. Oh my God, I can see if I can do this without yakking first. And meeting, and uh-oh, I might not be able to do this. Oh shit. I'm gonna